In the jungle, one small lie can cost you all your bananas.
Let me show you something simple. Imagine this small seed in my hand. It doesn't look like much right now, but one day it could become something big. This is how investing really starts. Now imagine this seed growing into a large tree. This tree represents a company. Strong roots, a solid trunk, and the potential to grow taller every year. A good company is built to last. But trees don't grow alone. People work every single day to take care of it. They plan, they build, they solve problems. Their work keeps the company alive and moving forward. To grow faster, the company can sell a small branch of the tree. That branch is called a stock. When you buy it, you're not buying fruit, you're buying ownership. Now that branch is yours. You are officially a part owner of the company. Not the whole tree, but a real piece of it. If the company grows well, the tree becomes stronger, more fruit appears, and the value of your branch can increase. Sometimes the company shares its fruit. That's called a dividend. You get rewarded simply for owning part of the tree. But nature is never perfect. Storms can hit, markets change, even strong trees can struggle sometimes. When problems happen, the value of your branch can drop. That's risk, and every investor must understand it. The stock market is the place where people trade these branches. Some buy, some sell. Prices move every day based on belief and fear. Smart investors don't panic. They think long-term. They plant seeds and wait for trees to grow. Patience is power. Before you buy a branch, understand the tree, because real investing isn't gambling, it's ownership. Remember the gorilla rule: make your bananas work. Subscribe for more banana economics. Stay smart, stay banana.